Hi guys, good afternoon. So today the all share price index crossed the 13,000 price range, and at some point we were roughly around 250 points away from my target that I gave during early 2021. So there was a bit of a sell off towards the end, which was mostly triggered by LOFC and CLC, and eventually the rest of the market followed through as well. So there's a lot of news going on that no one really knows why, but it was a sell-off that was in the which was most likely to happen with the way the index went up over the past 2 or 3 days. So it was good to see that prices were consolidating. Obviously there was a bit of profit taking. So since index closed at roughly around 13,000, that still puts us roughly around 500 points away from my target. So I'm not saying it will go there, but hopefully it looks like it should. So let's see how it goes and how the price action go happens over the next few days. So today we'll be looking at JKH, Keells Holdings, and also I decided to look into a bank, since we have not yet looked at that sector since we started this 140 days of stock analysis series. So because of that I decided to mix things up a bit. Banks are mostly long term and shouldn't look to be trading it. And on the other, Keells Holdings, I just feel like it's pretty much of an all-rounder. You can trade it. It's good for the medium term, but also I just feel like it has good long-term potential as well. But today we'll be looking, since we are mostly a trading community, we'll be mostly looking at how it will react over the short term to medium term and not the long term. So right, let's get started with John Keells. So let's look at the overall picture like we always do. So what we see here, we see here this very strong uptrend. Prices bottomed out during this COVID-19 low at around 80 rupees, and since then almost went well above doubling his price since this COVID-19 low. So since then what we've seen is a bit of a pullback. I wouldn't call this a bear market or anything, because what we see here is a very strong uptrend and then a pullback or a correction within an overall uptrend. So we'll be quickly looking into this area, but before that let's look at the rest of the chart. So despite this strong run over here, we are yet to reach any of the levels that prices have been over the since around this 2013 2014 area. So a long way to go in for JKH. Unlike other shares that have appreciated in prices, most of them are in all-time highs, and JKH is nowhere close to being near its all-time highs. So a long way to go. So now we know that there are still levels of supply on the chart of JKH that we need to keep an eye on, especially this 180 area, which has been a level of importance for multiple years. So if you look at this 180 area, you can see prices finding support, at the same time finding resistance on any bounces back to it as well. So you can see the Jan eye over here. So that 180 level is obviously going to be a crucial level, and then we have this 230 level as well, which is going to be important. But those are levels, especially this 230 level is mostly a long term level, but this 180 is mostly something that you need to keep an eye on over the short term. So right, let's move into the zoomed in picture of the chart. So like I said, we saw this overall uptrend since the COVID-19 lows. Now usually a correction, if the trend is strong, should usually stop anywhere between 38% to 50% retracement level. So what we're talking about is the Fibonacci level. So from this low to this high, any pullback or correction should stop within the 50% to 38% range if it's a strong uptrend. Now that being said, there are times when prices do come down to this 62% level before it moves higher, but anything below this 62% level and I would avoid it. So as of now, what we have seen is this 50 to 38% level has been the level that prices have been consolidating around. So that's a good sign. Mostly for the traders and the medium term holders. That's a good sign to see. So let's quickly look at the moving averages now that we have looked at the overall trend. Now if you look at the moving averages, we still don't have a clear picture for multiple reasons. Now if you've watched my other videos, I've always said that I need to see moving average alignment to confirm the trend. So moving averages show the trend. If moving averages aren't showing a clear signal, that means that prices are in a consolidation phase. Now if you look at the 20 and the 50, you can clearly see that the 50 is still above the 20 moving average, which means that we still don't have proper alignment. And if you look at the 200-day moving average, you can still see that the slope of the 200-day moving average is still a bit negative. It's starting to flatten out, and which is a reason why we have been able to find support around that level over the past few pullbacks. So that's a good sign. Whenever the slope is flattening out, you can expect it to be support. But if the slope is trending down, most likely prices are going to follow through and go below that moving average. So as of now, since it's flattening out, we can expect this 200-day moving average to most likely provide support for prices. So now we know that the moving averages are also aren't showing a proper trend signal. So what it's showing is that prices are in a consolidation phase. Now if you look at the if you quickly move into some patterns, now I highlighted this well before JKH broke out above this range. So what we call here is something very common that we have looked at over the past few videos as well. We call this a right angled broadening wedge. The reason why it's right angle is because of the 90-degree angle, and why it's broadening is because you can see that this trend line is moving away from this horizontal trend line. So it's moving apart from each other, which is why we call it a broadening wedge. So right now we can see that we have this breakout, and our price target from this range is pretty much the height of the pattern, and that height gave us a price target of roughly around 154. So prices reached that target on this day, on September 30th, September and October 1st. Between those 2 days, prices reached that target. So since then we have seen a bit of sideways action. So we have seen the prices threw back to support and then found buyers. We can clearly see the buyers are coming around this 142 to 140 level is where the buyers are active, and we can see multiple levels where prices have tested that area. So that's one, this is another one, and then we can see another one over here. So that's three occasions where prices have tested that support level. Now what we call this is something called a base on base. So pretty much why we call it a base on base is, this is one base, the pattern is one sort of base, and then we see another base above this pattern over here. So that's why we call it a base on base. So this is most likely a rectangle formation, or mostly a sideways consolidation phase. So so what we have is a rectangle forming above a right angle broadening wedge. So that's why we call it a base on base. So we can clearly see that after prices are broken out, we are forming another base in the form of a rectangle. So do we have confirmation of this pattern? As of now, like we always say, we don't, because we need to see confirmation through a breakout and through volume to confirm the move. Now if you look at the volume in general, I have always mentioned that volume usually falls as prices form within a pattern. So you can clearly see that volume on average has continued to fall as prices trade inside this range. And what you want to see is volume expand as prices break through and break out above this rectangle phase. So overall, if you look at the volume relative to selling, apart from this big sell day over here, buying pressure has been a bit higher than selling, which is a good sign. It's one way possibly you can assume that we might have upside breakout, but that being said, we are just speculating because we still don't have confirmation. So the key level for JKH to obviously break is around this 157 to 158 level. So above that, and we can possibly expect a further run to probably even retest the January highs. So how we measure price target again is the same thing. We take the height of the pattern and we add it to the breakout level over here. So assuming that the height is roughly at around 142 and this level is 158, we have a height of 16 points. So you add it to 158 and you roughly get a price target of roughly around 174 rupees. So we can expect prices, in case prices do break out and have a positive breakout, we can expect prices to most likely reach this 174 to 181 level. Now remember that 180 181 is a long-term resistance level on the chart, so that most likely is going to be a potential level of supply where sellers would most likely come in. But as of now, assuming that we have an upside breakout above 158, what we can expect is prices to run towards this range over here, this 174 to 180 range. So which is why I decided to include JKH as a short term to medium term trading potential stock, because as much as it has long term potential, I believe that it's good for the short term as well. So if you're a trader or an investor, it's something that you might want to have on your watch list. So whether you invest in it or not, that's completely up to you, and it's up to you to decide on whether you want to invest it on this or something else. So yeah, so now that we have looked at the price target, which is roughly at around 174 to 181, our stop level is obviously going to be below this 141 to 142 level. So ideally below 141 would be my ideal stop level. So if price is close below 141 on the daily chart, that's most likely when I would look to stop myself out and wait to see a proper sort of direction on JKH before I get in again. So right, so we have let's quickly summarize everything that we have spoken about. We know that the moving averages are showing a period of consolidation, and likely so we can see the prices are trading in a range, in a rectangular range. And we know that the 200-day moving average, which separates the market from a bull and a bear market, prices are above it, so we're in a bull market. And most importantly, the slope of the moving average is starting to flatten out, which is also a good sign for the bulls. Now in terms of patterns, we have two patterns. One is a rectangle, one is a right angle broadening wedge. The price target from the right angle broadening wedge has already been met. Now we have another base forming above the prior base, and we are waiting to see a breakout above this 157 to 158 level. So provided that we get a valid breakout, we can expect prices to roughly move towards this 174 to 180 level, and our stop level, which is also our risk level, is going to be below 141 rupees. So I believe that we have looked at pretty much everything that we need to look at. So in terms of a risk to reward basis, not the greatest, because assuming that you got in at these levels, you have roughly around 26 points to the upside. So assuming the target is 174, and to the downside it's roughly around 10 points away. So that's a decent risk to reward ratio. Usually they usually say that if you're trading, you should not go for anything below a 3-to-1 risk to reward, so reward to risk. So what it says is simply 3-to-1 means 30 points to the upside and 10 points to the downside. That gives you 3-to-1 reward to risk ratio. So anything less than that is not something that you should try and go to, especially if you're a trader. So in terms of JKH, if at these levels you have a good risk to reward, so 10 points to downside, and if you even assume that prices move towards 180, then we have a perfect 3-to-1 reward to risk ratio. So yeah, that's why I said that in terms of even trading, JKH shows good potential, but the only issue is that we still are yet to see a breakout. So hopefully we'll have one over the next few weeks or even the next few days. By the looks of it, volume is coming in, heavy volume is coming in, which is a good sign. So hopefully we'll have a breakout. So that's about JKH. If you have any questions, you can always comment in the comment section and I'll be happy to answer. So let's quickly move into our final one, which is commercial bank. So banks have obviously been a bit of a disappointment. So if you look at the overall trend again, something similar to JKH, we have had this but very simply put, we have had a very strong downtrend over the since almost 2015 when prices topped out. So since then prices have been pretty much in an overall downtrend. So we can see this is the final higher high, and then eventually prices created this low, and then we created a lower high, and then we broke below this level, and then we created a lower low, and then so far as of now what we see is also a possible lower high. So here are two ways you can obviously look at commercial bank. Is a trend reversal will come if commercial bank breaks below this 109 to 110 level. Now that will be the most important level for JKH to break. If commercial bank. So if commercial bank can break through this 109 to 110 ish level, that would be a really good trend reversal signal in my opinion, and we might most likely see commercial bank run towards this 145 to 150 level over the medium term if we do get a breakout above 100. So as of now, what we can see is an overall downtrend on JKH. So if we quickly add the moving averages onto the chart, we can clearly see that the moving averages are also signaling a downtrend. So how we look at it is the 20 is below the 50 and the 50 is below the 200-day moving average, and all of them are having a negative slope and prices are below it, which means that overall even the moving averages are signaling a downtrend in commercial bank. So right, so now that we have looked at the overall trend, let's quickly move into looking at some chart patterns. So if you zoom into this level over here, what we see here is a possible rectangle phase over here. So between this 78 area over here and this roughly around this 92.50 area. So this 78 to 92.50 area is where prices have been trading around each other. So we can clearly see some strong buying coming over here, and then over the past few days there has been a decent amount of buying relative to selling, which is a good sign. So if you're already in the stock, here are some levels that you need to obviously keep an eye on. One is obviously this low over here, which is going to be very important to hold. So that is roughly at around 77. So this 77 level is going to be very important in my opinion for prices to hold, and for at least prices to have some sort of belief that we might see an upside breakout as prices trade around this range. So for the buyers, the best case scenario is for prices to break through this 92.50 level. So in that case, we might see prices break above this January highs as well. So that's going to be a huge level to break this January highs. And most importantly, we know that if you look at the overall trend, we can see that there is some heavy resistance around this 109 to 110 range. So two very, very strong levels to break for buyers, and most importantly, this 92.50 is obviously going to be the most immediate level of resistance that buyers need to break. So looking at the chart, we can see that prices are consolidating. As of now, we are not sure whether it's a consolidation where we might see a breakdown and prices move lower, or we are not sure whether we'll see a breakout to the upside and prices move higher. So the best case thing for the bulls is obviously to see prices move higher and break through this 92.50 level. So as of now, if you're trying to get in at these levels, you are pretty much speculating that we might see an upside breakout, and the only advantage as of now is that you have a clear risk level. So you're reducing your risk by getting at these levels, because you know that if 77 is broken, most likely that would be another signal for you to quickly stop yourself out. The only disadvantage of waiting to get out of a breakout is obviously you're risking too much at that point. So if you miss the entry over here and you wait till 92.50, you're missing around roughly around 12 points of added gains around that range. So that's the issue with technical analysis, that we wait for confirmation, and more often than not that is a really good thing to do, because you usually avoid getting into unwanted stocks at the wrong time. So that is the whole reason why we wait for confirmation, is not to get in at the wrong time or the wrong price. So right now we have looked at the risk level, and the risk level is below 77 rupees, and we have also looked at the key levels to break. One is around this 92.50 level, the next one is roughly the January highs, and then finally this 109 to 110 level. So assuming that we have an upside breakout, our price target is roughly going to be the height of this range, which is between 78 to 92.5. that gives you roughly around 14.5 points. You add it to this range over here, you get roughly a target of around 107 rupees. So that puts us in the range between this 103 to 110 range, which is between the January highs and that very key important resistance level on the longer term time frame. So that will obviously be a key level of supply for the buyers to break through, and will obviously require a lot of buying pressure at that range. But as of now, there's still upside potential left if we can see a proper breakout. So overall, let's quickly sum up what we have looked at commercial bank. We know that the moving averages are signaling a downtrend, which is a reason why you should not be trying to get in on commercial bank as of now. If you're already in, then you know your risk level. At least my risk level is going to be below 77. It's up to you to adjust your risk level accordingly. By no means that you should be adjusting it at that level. I'm just saying where my risk could be, your risk can be at a completely different level. So that's one thing. And we have looked at key levels of resistance. One is at 92.50, next one is 103, and the other one is at 109 to 110. So that range is going to be clearly a very strong level of supply. So in terms of a target price, if we do have a breakout above 92.50, we can assume that prices are likely to move towards this 106 level. So we have looked at pretty much everything that we need to look at. The most key thing to know here is obviously that the overall trend is still negative for commercial banks. So if you're trying to get in your trading against a trend, something that I would never do, and something that pretty much every technical analysis book says not to do, is not to trade against a trend. So unless you're looking for the long term and you see potential in commercial bank over the very long term, if you're trying to trade the stock, then might as well avoid it for now and wait for everything to align properly before you try and get it in. So as of now, not something that I would have on my watch list. I think that there's still more room for this to improve and more room for this to consolidate before it ever decides to start moving higher. So as of now, risk is high towards the downside. So in my opinion, I would avoid it. It's up to you to make your own choice on how you're going to approach looking into commercial banks. So that's about it from the entire video. I hope that it was knowledgeable and you gained something from it. If you have any questions about commercial bank, obviously don't forget to mention in the comment section. So thank you for watching the video. If you like it, make sure to, if you find the video useful, make sure to like the video, stay subscribed so that you will know when I post another video. There's a lot of videos coming up over the next few months, so make sure you stay subscribed, and you'll get I believe that you'll get a lot of information of my videos as well. So and also, most importantly, don't forget to post your thoughts in the comment section on what I can do further to improve my videos and what else you guys want me to look at. So thank you for watching the video. Hope you guys have a really good day, and hopefully we will see 13,500 over the next few days. So stay positive and see you guys soon. Thank you.